Back to another weekly market breakdown. So this week we will be adding gold as well as GBPUSD, the Nasdaq 100, US30, NZDJPY as well as USDCAD to watch list, and I'll give you guys a full breakdown from a technical perspective. Now, as always, I will be doing the daily breakdowns as well, where I dive a little bit deeper into the data from a technical, fundamental, and order flow perspective. But for the weekly market breakdowns, we just look at things from a technical perspective. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know what it is that you'd like me to cover in my next video. Now, we're going to start off here with gold. Now, we can firstly see how gold printed this massive impulse and that correction, and we obviously expect that continuation to the downside. Now, if you take your Fibonacci there from the low to the high of this impulse, you can see how gold had tested and rejected almost each Fibonacci level as we can see it. But if we take our Fibonacci slightly lower, we can see we have the minus 27 that lines up perfectly with that structure. So in the long term, we can definitely expect gold to continue to the upside. Now, from a weekly perspective, what do we see? Now, I spoke about gold when we had this massive liquidity week over here. Now, I said that we can definitely expect gold to go and fill in that week, and that we can see that is exactly what the market has provided us. Now, if you look left over here, you'll see that the market is currently, sorry about that. So you can see over here that the market is currently testing this previous level of resistance that got broken. It became, this level of resistance. While it was support here, it got broken and became a resistance, and you can see how the market is currently testing that level as resistance once again, giving us an indication that we could potentially see gold pull back in the short term, and then from there we could see that continuation happen to the upside there as well. But the way we could be looking for a move over here is because the market is so bullish as it approaches level, we should be able to wait for some deceleration first. So where you see the market showing signs of sellers entering the market, we're going to then wait for that pullback before the continuation. Now, if you drop down on the daily time frame, what do we see? Now, here from a daily perspective, you can see this was the last level of resistance that the market had broken. Now, after the level of resistance get broken, it becomes support. Now, if you take your Fibonacci from the low to the high, you can see at the moment we do have a 0.38 pullback by taking off Fibonacci from that level. So going into next week, we could potentially see gold slightly go higher, pull back, and then continue to move to the upside there as well. Next up, we do have GBP USD. So starting on the monthly time frame, what do we see? Now, firstly, from a monthly perspective, I've spoken about GBP USD when the market was trading at this level, explaining all of the reasons why we could see this market go to the downside. Now, there's a good opportunity for us to go and see GBP USD test these previous lows in the market there as well. Now, going further to what do we have? Now, we could see the market had broken below this level here as well. That acted as support. It became resistance. We had that liquidity week in the market there and the market pullback, and we can see how the market is currently testing previous level of support. So for GBP USD in the short term, we could see some bullish momentum before the continuation to the upside. Now, from a weekly perspective, what do we see? Now, you can see how the market had printed this information. After an information, you expect a pullback to the neckline before the continuation to the downside there as well, giving us a further confirmation that the market is expected to pull back going into next week before we see the meltdown happen. Also, if you take your Fibonacci there from the high to the low of this massive impulse, you can see how we've got a 0.382 Fibonacci lining up perfectly with the neckline of that information there as well. Now, if you drop down on the daily time frame, what do we see? Now, from a daily perspective, we can see how the market had been stuck within this consolidation phase. The market finally broke out of it, and we can see how once again the market had found that support as we saw from a weekly perspective as well. Now, going into next week, the best way to approach the situation is to wait for GBP USD to pull back to that level of support that got broken, that is now turned resistance, and then from there we can start looking for selling opportunities for the market to go and test that previous level of support as identified from a monthly perspective. Now, if you go down onto the NASDAQ 100, now I spoke about the NASDAQ 100 on Thursday when the market was sitting at this level, and I explained all of the reasons for why we could see that meltdown. Then I'm here to give you an update on that as well. Now, starting here on the monthly time frame, what do we see? Now we can see how the Nasdaq 100 had broken below this level of resistance. It became support. Support's currently not holding, as we can see. There is a high possibility that we could see the Nasdaq 100 go and test the 12,200 levels. So for the long term, we are going to use that as our last target, but for the short term we are going to use this as our target because the market had printed that structure there as well. From a weekly perspective, what do we have? Now we could see here based off last week the market had printed this strong level of support, got broken, came to test it as resistance, giving us a further confirmation that we can expect the market to melt to the downside going into next week. Now here on the daily time frame, what do we see? Now from a daily perspective, firstly we saw the market had printed this level of resistance, got broken, became support. All of that support's broken. I can expect the market to pull back slightly before the continuation as well. I can also see how the market printed this information. After the information, you expect to pull back to the neckline before the continuation to the downside. Now going into next week, there is a high possibility that we could see the Nasdaq 100 pull slightly lower, then pull back, and then continue to the downside there as well. Alternatively, if the markets start pulling back from early next week, then we're going to monitor the price action the same way. Either or, we're going to have to wait to get into the market once we get a pullback to that level there as well. And next up, we've got the US 30 over here. So the US 30 here from a monthly perspective, firstly, we can also see here, excuse me, that there's a high possibility for the Dow Jones to come and hit this 31,000 level in the future. Now you can see that we got the same kind of price action here on the Dow Jones as well. So before we get to that level, firstly we had the market printed this information, came back to test the neckline, so we can expect the market to continue to the downside here as well. Now from a weekly perspective, what do we have? Now like I said, we've got the same type of price action. The market had printed this level of support, got broken, and it's testing it as resistance there as well. Now, if you drop down on the daily time frame, what do we see? Now, firstly, the price action on the daily time frame is quite choppy. Because if you do look left, you'll see over here that the structure that the market had created, and the market also printed this structural level over here. Now you can see how the market had been stuck within this consolidation phase. Now the best way to approach the market stuck within a consolidation phase is to wait for the market to give you a clear break below this level. Then on the retest, we can start looking for selling opportunities to the downside. In doing so, the Dow Jones will also complete this information to the neckline, which is considered a bearish pattern from a technical perspective as well. Next up, we've got NZDJPY. Now, if we start here on the monthly time frame, what do we see? Firstly, we can see how NZDJPY is currently testing a very strong level of resistance, but so in the long term, we do expect the market to slightly continue higher, but we know that the Japanese yen is a safe haven, and with the tensions going on between Russia and Ukraine, that's only going to increase the Japanese yen strength in the long term. So we can definitely expect this pullback before the continuation, if there is going to be a continuation as well. Firstly, we can see how the market is currently testing this strong level of resistance. The market had acted as resistance, broke above that, became support. Support did not hold. Market came to test that as resistance once, and we can see how the market is back at that level once again. So we can definitely expect a pullback to the downside there as well. Now, dropping down on the daily time frame, what do you see? Now, before we get on to the daily, it's important that we understand where we can expect the market to pull back to. So we can see, if you look left over here, that this was a very important structure that the market had created. So we're going to use that as an overall take profit level in the market for where we could for where we're going to be looking to sell the market down to. Now from a daily perspective, what do we have? So we can firstly see here on the daily time frame, so the market is currently testing this level over here. Now it's important that we are reactive and not predictive, and we have to learn to adapt to the ever-changing market environment. As always, the market could start to melt down from exactly where it is right now, and we could potentially see NZDJPY start melting to the downside. Alternatively, the market could go slightly higher before starting that meltdown to the downside. So it's important as traders that we are reactive and not predictive and learn to adapt to the ever-changing market environment. It's also important that you wait for some signs of deceleration, because you can see the market's quite bullish. So you need to at least maybe see one red candle in the market to confirm that the market is ready to move to the downside there as well. Next up, we are going to look at the USDCAD. So starting here on the monthly time frame, what do I have? Now the USDCAD has been very has not been moving that much. We could see how the market was stuck within this consolidation phase, and we could see the similar price action taking place on USDJPY. But that's because the Canadian dollar's got a strong correlation with oil, and the dollar index is considered a safe haven. So due to times of uncertainty, um, oil prices increase, which increases the strength of the Canadian dollar, and as well as the dollar index also increases in strength. So it's normal to see these things, but we could potentially make use of this opportunity over here. So we could firstly see how the market had been stuck within this consolidation phase since December. The market had not broken out of that level yet, but we are going to make use or take advantage of the short-term opportunity that we could potentially see in the market here as well. Now, just reading the market structure, we could see we have this potential inverted head and shoulders. We also have the potential of the market printing this impulse, because we had that impulse, we had the correction. We can see the market tested and rejected the 61.8. Also, if you adjust your FIB on the correction, you can see how the minus 27 is lining up perfectly with that previous level of resistance that the market had printed there as well. Now, dropping down on the daily time frame, what do we see? Now, it's very clear that the market had given us a fake out to either side, which is considered a liquidity move. First down, up and then again down. Now, firstly, we can also see how the market printed this candle with this long wick. Normally, you expect the next candle to go and fill in the wick. And going into next week, we could potentially see the USD-CAD go back, break above the level. And then on the retails, we can start looking for buying opportunities because we had some good positive data coming through for the US dollar as well. Now, that's all from my side. Thank you for your time. And as always, cheers for ears.